This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to talk about why a farmer's poor records cost him a great deal of money, and why a crop insurer under the statute setting up the crop insurance program can recover overpayments made by a insurer to a farmer. One of the maxims of farming is the imperative that each year the farmer risks the upfront costs of sowing in return for the never guaranteed prospect of back-end revenue from reaping. The Federal Crop Insurance Act helps farmers to manage these uncertainties through a crop insurance system which the Federal Crop Insurance Corporation oversees. Under this federal program, farmers can purchase insurance from Insurance Corporation or from an approved insurance provider that the Insurance Corporation reinsures. In Edgar Miller versus United States Department of Agriculture, a decision of the United States Court of Appeal for the Sixth Circuit dated January 3, 2023, the Sixth Circuit was asked to be the last word on a series of disputes over payments and overpayments of crop insurance claims. For years, Edgar Miller purchased crop insurance, hoping to protect his farm for poor harvests. While the insurance for the most part served that purpose, it also brought him 3 federal lawsuits, an arbitration, and an adverse agency determination from the Federal Crop Insurance Corporation. Miller challenged this last decision, the agency's decision under the Administrative Procedure Act. The district court rejected the challenge. The common crop insurance policy promulgated under the Act governs all disputes about crop insurance. The crop insurance policy requires compliance with the Act, attendant regulations, and the insurance corporation's procedures. It sets out the particulars of the insurance coverage and the claims process. Certain provisions address the readjustment and repayment of settled claims. Section 21b(3), for instance, allows for repayment of overpaid claims if a farmer knowingly misreported yield information, and Section 21f contemplates repayment if a farmer fails to maintain or provide certain records. The policy also requires the arbitration of disputed claims. The insurance corporation issues a generally applicable interpretation that binds all program participants because these decisions must be generally applicable. Any request for interpretation must not turn on or even invoke specific facts or alleged conduct. Edgar Miller, a corn and soybean farmer, experienced this large regulatory regime firsthand. He purchased crop insurance from an approved insurance provider, Farmers Mutual Hail Insurance Company of Iowa, and after poor harvests in 2012, 2013, and 2014, Miller filed claims. He received payouts for 2012 and 2013, but Farmers Mutual declined his claim for 2014. Making matters worse for Miller, Farmers Mutual realized that it had overpaid Miller for 2012 and 2013 to his poor record keeping and demanded repayment. When Miller refused, the parties went to arbitration. Farmers Mutual secured a favorable arbitral award and filed a petition to confirm it, but making the situation more difficult for both sides, the district court nullified the award after finding the arbitrator had stepped out of line and interpreted the policy in deciding that Farmers Mutual could readjust past claims and require repayment from Miller. The parties returned to the insurance corporation. It issued in response a document called Final Agency Determination 287. The ruling explained that multiple policy provisions require farmers to repay overpaid claims and that insurers have a duty to correct errors in claims. With Final Agency Determination 287 in its hand, if not its ear, Farmers Mutual filed another petition to confirm the arbitral award, and this time the district court granted it and the Sixth Circuit affirmed. Having reached the end of the road on the arbitral proceedings, Miller challenged one premise of the ruling Final Agency Determination 287 under the Administrative Procedure Act. The district court rejected the challenge. The Sixth Circuit was asked to determine if the Final Agency Determination 287 complied with the Administrative Procedure Act. Only if the ruling is arbitrary and capricious may the Sixth Circuit set it aside under the Act. Farmers Mutual asked whether Section 21B3 of the crop insurance policy, which requires repayment if a farmer knowingly misreported any information related to any yield, sets out the only circumstances for recovering overpaid claims. Insurers must audit and correct any claim that was not adjusted according to the insurance corporation's loss adjustment procedures. The insurance corporation found that 1. Multiple policy provisions require farmers to repay overpaid claims, and 2. Insurers have a duty to correct such errors. The Sixth Circuit concluded that the text of the crop insurance policy and the regulatory framework supported both conclusions. The policy's text obligated a farmer to repay any overpaid amounts in a variety of circumstances. The policy's text also required the correction of errors. The crop insurance policy tells insurers to comply with the insurance corporation's loss adjustment procedures and obligates farmers to retain and provide records upon the insurer's request. These obligations bolster Determination 287's finding of a duty to audit and correct claims. The crop insurance system's broader regulatory framework supports these conclusions as well. The crop insurance policy requires insurers to comply with the insurance corporation's procedures, and the regulatory scheme binds all program participants, both the farmer and the insurer. The insurance corporation's procedures convey a similar set of obligations to the policy. The loss adjustment manual, for example, outlines extensive processes that insurers must follow in adjusting claims, including corrected claims. The bulletins and informational memoranda subject insurers to periodic compliance reviews and direct insurers to reevaluate claims after changes in guidance occurs. All perspectives considered, the crop insurance policy and the regulatory framework, according to the Sixth Circuit, support the two core holdings in Determination 287, making it anything but arbitrary and capricious. The Sixth Circuit found that Miller's objections to the earlier determinations were unconvincing. Policy provisions requiring repayment was inconsistent with Section 21B and its carve-out of the right of the insurer to request and inspect records, and does not fit with the process for correcting claims in the loss adjustment manual. In my opinion, Mr. Miller, a farmer, had his claims disputed and overpaid mainly because of a lack of an effective record keeping that resulted in overpayment of his crop insurance claims. The statutes and the policy that records in insurance form, the statutes require a return of overpayments. Miller delayed the process by argument, arbitration, litigation, and some rather interesting arguments, none of which convinced the Sixth Circuit, who confirmed the district court's ruling. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog and will be advised by email of every blog posting, usually 5 a week, sometimes more. You can also subscribe to the videos at rumble.com and youtube.com. And if you do, I'd appreciate it if you click on the like button and the Rumble button as you do. And you might also consider subscribing to my locals community and my Substack publications, which provide additional, for a small fee, information, videos, and webinars. Thank you for your attention.